This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
This chapter is going to talk about income tax, and specifically the income tax computation, which is a pro forma of all the income that is received by an individual in a tax year, so that we can then add that all together, take off the reliefs, work out the tax. So if we look at the chapter that we have here, it says there that an income tax computation is prepared for each taxpayer, each individual, and it records the income to be taxed for that individual for the tax year. Now, the tax year runs from the 6th of April to the 5th of April. It's a historic situation. That's kind of where it is. So we are looking at the Finance Act 22. So this runs from the 6th of April 22 to the 5th of April 23. And as I mentioned in the introduction, it is vitally important that you watch the correct Finance Act videos, lectures, recordings, whatever you want to call them, and that you have the correct manual, and that you have the correct Kaplan book, because if you buy a book that's old, then the dates will be different, the rules may be different, and you will get confused. So please, if you're doing your tax exam June 23, September or December 23 or March 24, this is the Finance Act you need. These are the this is the tax year that we are dealing with. So notice here, I mentioned this in the introduction, which you should have watched hopefully before, a section C exam question will be for 15 marks, could well include one of these computations that we're going to look at today. This is a long chapter, so stick with it. There are lots of examples to go through, but by the end of the chapter you should have confidence in your abilities to perform what you need to do. So, two main parts of it. Okay, now when you do your pro forma, please, for the exam, you separate them out. Don't flow one into the other. Presentation is key in the exam. You need to help the examiner to see the processes that have gone in your head. Set it out nice, neat, well presented. It will help. Okay, so first, the computation of the taxable income. So that's all the income that's come in. We'll look at the pro forma in a minute. All the income that's come in and any reliefs that we've claimed. Then, and separate them off. A new pro forma underneath the calculation of the income tax. Okay, now that's either the liability and or what's payable. It will all make sense as we get further in. And that taxable income computation is divided into 3 analysis columns. A dividend column for dividend income, savings income, bank interest, building society interest, that's in its own column. And then what's known as non-savings income, which is made up of anything that you've had from a job or a salary, trading profits, and or property income. Now it may be that you've actually had to work some of those figures out in a working separate from this computation and brought your answers to here. It will all make sense when we get a bit further into the chapter. Now it says the analysis is required as different rates of tax are applied to different types of income. So that's why it's important that you follow the pro forma that I am going to show you today. And this pro forma is what the examiner expects. It's what the model answers. When you get your Kaplan textbook and you look at the questions, if you look at the answer, that's what the examiner's got in front of him or her. Okay, they've got that in front of them, and that's what they will be using to mark your exam paper. So make sure your answer looks like that. Okay, well labelled. Here you see, I'm going to emphasize this a lot. You'll get used to it. neat, well labelled, presented. Okay, so put all the labels in as well. So we mentioned that a tax year runs from the 6th of April to the 5th of April. And we're doing 22 to 23. So non-savings income, if you've got a job, then you will get a form P16. You'll find that in the self-study admin section. That will show all the income that you've received in the year and the tax that's been deducted. There will also potentially be a form P11D, and again you will find that in the admin chapter for individuals. It may be if you've got a trade, then there will be the profits that you've worked out. And if you've got property income, then you'll do a little income and expenditure account to show how much profit you've made on that particular property in that tax year. Now, savings income, what normally happens with a bank or a building society in the UK, you get a certificate to show what income has been received. Okay, what a certificate. And a dividend, because remember we've got 3 columns, the dividends are received on certain dates. So any date that falls between the 6th of April 22 and the 5th of April 23, if you have a dividend with a date between those two, that will go in the pro forma. Okay, so let's have a look at that pro forma in some detail. It's on the next page, if you'd like to turn to that. Okay, see how the columns there? Non-saving first, savings second, dividend third. They're in that order because that's the order in which they are taxed. That's the order in which the examiner is expecting them to look like. And then you've got this total column on the end. As you progress in your tax studies, you will end up being able to do it with 1 column. But at this stage, let's stick with the 3, with the extra total column on the end. Okay. And again, it's bringing all that information together. So you can see there, trade profit from self-employed people, employment income from people who have a job, property income, dividend income, building society income, bank income, bank deposit interest. Now, all of that information will be in the question, so you will bring all the information and put it in the correct columns. Underline it, subtotal it. This is one of the labels that I mentioned that are so important. Okay, make sure you get used to using this. The more you do it, the easier it will become. Then you can then deduct qualifying interest and other trade loss reliefs. More of that will come as we go through the course. That then gives us what's known as net income. Then everybody gets a personal allowance. I'll deal with that again later in the chapter, which will give you your taxable income. So you've got your total income, which is everything, net income after reliefs, and then what is taxable after the personal allowance. Make sure you get those labels and underline everything, finish it off nice and neat. So it talks there about employment income is always gross before the deduction of taxes at source by the employer. Okay, and it will be stated gross within the question. It might have in brackets after it, pay as you earn, which is the tax that's deducted. But that's deducted from that gross figure. Then the deductions, you can see the 2 asterisks there, from total income and the deduction of personal allowance from net income are deducted in order from. You'll notice they're in the non-savings column first. You see that? Always difficult to get the whole thing on the same page. But they're always from the non-savings income first. Always. If there's any spare or there isn't income to cover it, then you move it across. Okay. So deductions are from total income, the deduction of personal allowance from net income, deducted in order. Firstly, non-savings, then savings, finally, dividend income for the purpose of this exam. Okay, that you need to do here. Now, this personal allowance for this tax year is £12,570. That figure is in the rate that's at the front of your exam. As I mentioned in the introductory lecture, do not guess because it changes year on year. It is important that you always check. It takes seconds just to go to the rates at the front of your exam, front of your mock exam, whatever. Check it, make sure it's right. If the examiner's given it to you, just copy it into your answer. Always check it. It's always important. I'm going to write that on here because it's important. Always check your rates. That's particularly important for those of you who are doing retakes, who may have done it with the Finance Act 21. The note figures are different. Okay. So now, some income that you receive is exempt. Not all income is taxable. These are the ones you need to look out for. Be careful. Okay. These are often added into a question, just to kind of catch you out. Okay, they're trying to catch you out. Also, so these are the ones: interest and bonuses from national savings, and they might sometimes say NSI rather than the full word. Certificates, not an account. Interest and dividends from an ISA. Anything you've won in gaming, anything you've won in the lottery, and any premium bond winnings that you might see. Okay, they are exempt. Now, if you see them in the question, and they've been added in to try and catch you out, if you see them, do not ignore them. Do not ignore them. Add them in and write next to them, exempt. So you would then sort of add in here, bank deposits, exempt. So the examiner knows you've dealt with it, but you haven't put it in the question, in your answer. Okay, so never ignore it. Okay, because it proves this is a rule. And I said tax is made up of rules. This proves, if you write it in your pro forma, it proves you know the rule. The examiner will give you a mark for it. Okay, it's the way to go. All right, so moving on. We've calculated the taxable income. We've added all the income, that whole pro forma. We've done all that. The second part, and I said do a separate part, I'm going to write in there, separate part, is to work out the tax. So the tax liability is the income tax which is due on the taxable income that you've just calculated in that pro forma. Okay. So it says, in calculating the tax liability, it is necessary to take each part of the taxable income in order. We always tax non-saving income first, then saving income, and then dividend income. It's called top slicing. That's the technical term for it. You might hear me mention that. So you do them in order: non-savings, savings, dividends, because they have different rates, okay, as you'll see in a minute. Now, the difference between the tax liability and the tax which is actually payable. So the liability is what is due. The tax payable is what you actually have to pay, which can be different because some of the income that you've put in that pro forma may actually have had tax deducted at source. The main one is this one: pay as you earn. So if you have a job, you get a gross salary each month. They actually work out the tax each month. The people you work for, they work out the tax each month, pay that over to the revenue on your behalf, and you only get the balance. That is tax deducted at the source of where the incomes come from. So you actually sometimes pay less than the liability is because you've already paid tax once before. Now, the rates. These are the rates. They are in the rates at the front of your tax exam. Always check them. Never guess. You'll get fed up of hearing me say that. But hopefully not. Okay. Now, non-savings income, you'll see here, that we have various different chapters which are going to deal with those kinds of income in depth. So trading profits will be in chapters 4 and 8, employment income will be in chapter 9, and property income in chapter 3, and we'll deal with those later. So let's do our first example, shall we? Are you ready for your first example? Mr. Smith has been working for many years, receives a salary of £62,500 per annum, that means every year, in 22-23, of which pay-as-you-earn has been deducted at source of £12,000. He has no other source of taxable income. Now, because there's only one source of income, we only need one column. You wouldn't write the whole pro forma out for this situation. So, his non-savings income, so labels across the top, label down the side. He's received a salary, and the gross salary is £62,500. You look on the pro forma, we then need to take off any reliefs. There's nothing in the question. But then we take off the personal allowance of £12,570, which leaves us with taxable income of £49,930. So that's a very small pro forma, as we saw earlier on. Okay, so that's all his income. There's no other income. You don't need all the various columns. That's sufficient. Now, that's the first half. The second half, so that's the first bit. The second half, we now need to work out the income tax. Always put a nice little heading in so the examiner sees that you're on the next phase of your computation. Now, the rate, I'll go back up the page, up to 37,700. The first 37,700 of your income is taxed at 20%. That's classed as basic rate. Okay, so up to 37,700, that's going to be taxed at 20%, which works out at £7,540. Now, obviously, this individual, what's his name, Mr. Smith, earns £49,930 after personal allowance. Therefore, he is a high rate taxpayer. Now, the best way to do this, bit of a safety net thing, you've got to tax that figure. You've already taxed 37,700. There's a safety net thing. Just write that in there, because that's the total that you are going to have to tax. So the balance is the figure in the middle. Okay, so 12,230, you know, those two together, it comes to 49,930. That's going to be taxed at the high rate. So he's a basic rate here, up to that. Now he's a high rate taxpayer, and that's a 40%, which is 4,892, a little over the top there, 12,432. Now that's his tax liability. From his income, that's his liability. And yet, what does the question say? Tax deducted at source. So he's already paid 12,000 according to the question, which means the balance, or the tax payable, it's on a different page, so the computer's just playing out, £432. Now that's what he's actually got to pay. That's his tax bill, because he's already paid the other balance. Okay.